Happy February, everyone! With everything going around us, including the potential new 25% tariffs by the US government, the devaluation of our dollar, and the recent interest rate cuts, there is so many questions and concerns as to how this is going to affect our real estate market, how this is going to affect our investors. So we thought to make a quick video on this while we also go over the recent Toronto Real Estate Board stats for January compared to January of last year. So we're going to talk about a few things today. We're going to go over 3 of the most important stats from the Toronto Real Estate Board comparing the real estate market now in Toronto versus last year, if we've seen an improvement or not. And then we're going to go on to talk about 3 things that are pressing the news right now: the tariffs, our dollar, and interest rates, how all this is going to affect real estate for us and our investors. So let's get right into it. So the first point we're going to discuss is total number of sales. Total number of sales compared to last year, January, have actually gone down by almost 8%. But if we compare this to just last month, December, sales have actually increased by 10%. And this is for obvious reasons. Buyers are feeling a lot more confident with the lower interest rates, and sellers are feeling confident as well that more buyers are now entering the market and they can get proper values for their homes. What we've noticed on our brokerage level is that the number of residential transactions have mainly increased on the entry-level homes, such as single-family homes, townhomes, and semi-detached homes. But whatever is in the luxury market at the moment is still a little slow, and also on the condo market side. But with the newest interest rate cut and hopefully more cuts to come in the future, we're hoping the market's going to pick up a lot sooner. We're hoping the spring market come March, April, at least for the low-rise homes, will significantly increase, and then other categories of assets will follow suit. Now, the number 2 stat is number of listings in the market. Number of listings have astonishingly increased by 48% compared to last year, which shows sellers are very confident again, and they're confident that these lower interest rates are going to bring in more buyers and that this is the time to sell. Now, we definitely agree with this. We are telling our sellers that we work with in our brokerage that start prepping your listings. This is a time to get into the spring market because buyers are finally entering again and feeling confident because they know at least that interest rates aren't going to go higher. They're either going to stay steady or go lower from here. So this is a great time to be selling if you are considering. Yes, you're having a lot more competition in the market because of the significant number of listings, but with the new buyers entering the market and the increase of buyers, that will hopefully soon balance out. Now, the third most important stat is the average selling price of a home in the GTA, and this has actually basically stayed steady since last year. We've only seen a 1% increase in average sales price, which is a very good sign that prices are holding up in the GTA. Now, it really depends on which house category you're in, so let's go into it and split down every category of home in the 416 in 905 neighborhood. Now, if you own a semi-detached home in the GTA, in the 416 neighborhood, your price has actually increased by 3% compared to last year to an average sales price of $1.1 million. And in the 905 neighborhood, your average sales price has increased by 2%, bringing you to an average sales price of almost $980,000. Now, if you own a townhome in the GTA in the 416 neighborhood, your price has actually gone up by 5% compared to last year, bringing you to an average sales price of $940,000. And a townhome in the 905 area, you've actually seen an increase of almost 1%, bringing you to an average sales price of $890,000. And now for condominiums, if you have a condo in the 416 neighborhood, your price has actually gone down by almost 2% compared to last year, bringing you at an average price of $690,000. And a condo in the 905 neighborhood, your average sale price has gone up almost 1%, bringing you to an average price of $633,000. And if you own a semi-detached home in the GTA, in the 416 neighborhood, your price has actually gone down by 3%, compared to last year, bringing you at an average price of $1.1 million. And if you own a semi-detached home in the 905 neighborhood, your average price has actually gone up by 2% compared to last year, bringing you at an average price of $980,000. So overall, the real estate market here in the GTA is picking up and is showing signs of improvement, but with the new updates in terms of tariffs and what's happening with our dollar, there's a little bit of confusion in the market, right? And time will only tell how everything plays out. But we are hoping that this recent interest rate decrease does help bring a lot more buyers into the market. And like we said, we're noticing a lot of entry-level movement happening, and we're hoping the spring market in another month will bring us a lot more transactions. Now let's get into the 3 things that we need to talk about and see how they're affecting our investors and our real estate. Number 1 is the interest rates, number 2 is the devaluation of our Canadian dollar, and number 3 is tariff. To start off with interest rates, we all know Bank of Canada has recently just done another interest rate drop of 0.25%, bringing their rate down to 3%. This is good news for everyone in the real estate market. It's good news for buyers, it's good news for sellers. Buyers have more confidence that at least rates aren't going to go up. Great time to lock in a good rate or keep it variable, because we kind of have an idea that things are going to be probably not going up in terms of interest rates for a while. And for sellers, them having an idea that buyers have more confidence gives them more confidence to get the highest top dollar for their homes. So if you're looking to buy or sell, there couldn't be a better time than now, especially for buyers, because there's tons of inventory out there, so it's a great time to get good deals. If you're thinking, reach out to our team. We've got over 20 years of experience in the GTA real estate market, and we would be happy to help you get the best value for your home, whether you're looking to buy or to sell. Now, getting into the second point is the devaluation of our dollar. Right now, as of today, February, the first week of February, basically, we're at $1.45 compared to the US dollar, meaning you need to buy for $1 US, you need $1.45 Canadian. This is one of the highest rates I have ever seen in my 15-year career in real estate. The average that our Canadian dollar usually sits at is around 130, 132-ish, maybe 125, sometimes it goes down to, but it never goes up to 145. So what this means for our real estate and us is everything in the US is a lot more expensive now, right? So travel-wise, it's gonna cost us a lot more. Goods-wise, getting goods from the US is gonna cost us a lot more. And now in terms of real estate, for those of our investors that own US property, there couldn't be a better time to sell, especially if you've been considering to sell your property. This is one of the best times, because you're gonna be automatically making an additional 10 to 15% on just the currency exchange, right? And the Florida market particularly, that we work in a lot, is doing great in terms of its market. So now if you get your listing in the door and get it sold, you're gonna make a lot more money, not only with the market prices there, but the additional currency exchange. So this is something you're considering to do, call us. Our team would be happy to help you, as we do a lot of cross-border transactions in the last 15 years, and we basically know how to guide you step by step. Now, the third most important thing that we want to talk about today is tariffs. And I feel this is what's causing the most confusion in the market, because we've never seen this. We've had a tax treaty with the US for the last 30 years. It's always been the same. Goods being traded between Canada, US, Mexico, this is just normal. And for now, all of a sudden, tariffs to be introduced, all of a sudden, and not even just a few percentage points, 25% tariffs, is causing literally havoc to business owners, to people. We don't know what to expect. So I wanted to kind of just diagnose this a little bit in terms of real estate, what potentially could happen. We know President Trump has put a 1-month hold on these tariffs, so potentially they won't come into effect until another 1 month, but just in case they do, we all have to be prepared. So me as an investor, and what I'm telling our investors and what I'm telling our real estate holders is these are the few scenarios that can play out in case the tariffs actually do come into play. So the tariffs are going to affect us in two ways. How? Number one is cost of goods will go up significantly. Why? Because all of a sudden the US is charging 25% tariff on any imports coming in from Canada and Mexico to basically their citizens. Now what happens is, yes, they'll all of a sudden start buying more American goods to keep their costs down, and that's the intention of the government, buy more local, don't buy imports. But what usually happens is, if the imports price has already gone up, naturally other price of goods start to go up as well, just because the cost of everything goes up. Our government is planning to put retaliatory tariffs on imports coming in from the US, so costs of goods are going to go up in Canada as well. And specifically for real estate, the most important cost of good is building materials. If building material prices start going up, because we do a lot of importing and exporting of lumber, steel, aluminum, plastics in building homes, what's going to happen next is that the price of homes will naturally have to go up, because developers are not going to eat this cost. They're going to pass on this cost to buyers. They might make a little bit less profit, but right when their profit margins get hurt too much, guess what? The price of the homes go up. Now, if this starts happening, yes, home prices will go up, but Bank of Canada and our Canadian government anticipate this as well. They know this might be an effect by the tariffs. So what they're gonna do as a next step, most likely, and this is the second effect of the tariffs, is that they're probably gonna start decreasing interest rates, because they don't want to get into the inflationary pressures that increased prices cause. So it's going to be a balancing act. Prices will start going up slowly, and to deflect that, the government's going to start decreasing interest rates. And now we're going to have to basically see what happens and what comes out of all this. But the bottom line is that I have a feeling, and I believe, there will be inflation. If these tariffs come into effect, it's very difficult to control inflation. So that is something that you have to keep in mind as an investor, as a real estate holder, and make your play accordingly. If you need more advice, more just strategy sessions, we would be happy to talk to you, happy to help out. But just please be mindful of what's happening and how this might affect your real estate portfolio. But overall, time will tell us what happens, so keep up to date with the news. We'll continue to bring you these updates. Do subscribe if you're liking these videos so we can continue bringing these updates to you. And until then, have a wonderful day, and we'll talk to you soon.